All right, it's upon that time that we get to have the debate that you have all been anticipating this Wednesday morning, the taxes that will be coming your way and out of your pocket in the next financial year, 2024-2025. And so in our Kickstarter, we're going to be having an analysis on the proposed tax amendments, the legislative changes in the Income Tax Amendment Bill 2024. I am Priscilla Regina Daloga, and you are most welcome on our Kickstarter. Now, of course, the backbone of it is that a few days ago, the government did present a 58.34 trillion Ugandan shillings national budget for the financial year to be 2024-2025, and it's intended to focus on full monetization of the Ugandan economy through agriculture, through industrialization, expanding and broadening services, digital transformation, and market access. The Minister of State for Finance, General Duties, Honorable Henry Musasizi, who presented this budget, also did list investments in wealth creation initiatives, investments in social sectors like education, in health, as well as water, and you do have manufacturing in there as the other priority area. This was tabled before April in accordance with Section 13 of the Public Finance Management Act 2015, which of course does state that the Minister on behalf of the President should present a proposed annual budget for the financial year to Parliament by the 1st of April of the preceding financial year. Now, when you look at some of those proposed amendment bills, Excise Duty Amendment Bill 2024, the Stamp Duty Amendment Bill 2024, Tax Procedures Code Amendment Bill 2024, you do have the Value Added Tax Amendment Bill 2024, and of course the Income Tax Amendment Bill 2024. Now, the Speaker, Anita Annette Among, while referring them to the House of Committees on Finance and Budget for consideration, she did say these are tax bills that will help us to get money to fund the next budget. To help us fund the next budget. Question is, do we feel that the current budget has been well funded by what has already been milked out of the cow? And in analysis of that and the forthcoming financial year, we are joined by Mr. Mark Ruhiundi, who's a tax lawyer, as well as Benard Cankara, who's a PhD researcher with Public Policy and Governance with Chambogo University. I'm going to allow these gentlemen their salutations before we get into the nitty-gritties, starting with my immediate left. Good morning to you, Benard.
Good morning, Priscilla. Thank you for having me, and I'm glad to be here.
Okay.
Yes.
All right. Council, you're most welcome.
Good morning, viewers. I'm happy to be here.
Okay. All right. So let's talk about these 5 tax amendment bills that you already know. A breakdown for them in regards to who they affect and you know, how much will be affected of Ugandans' pockets and earnings and savings, or any other way that they earn an income in today's economy. Let's start with you, Council.
Okay. So the bills you already mentioned. Income tax amendment bill of 2024, the VAT amendment bill of 2024, the excise duty, and did I mention the stamp duty?
The stamp duty.
And the tax procedure code.
Yeah.
The key taxes are being introduced through the income tax amendment bill, and then the excise duty amendment bill. The stamp duty is mostly incentives to key sectors of the economy, but the key taxes, I think the government is mostly looking at the real estate sector to raise the bulk of the taxes that they think will fund the deficit that they're looking at in the budget.
Okay. All right. Benard, with your interaction of the proposed bills,
for me, it provides generally mixed reactions. When you look at the bill, there are others which, of course, score us highly, which really requires that they should be taxed. However, there are others that provides mixed reaction. For example, when you look at the land, the taxes on sales, the proceeds of properties on land, then
5%.
It's where, for me, I have a huge debate. I've looked at it and knowing where we are and knowing the population of the urban poor, for example, then you then ask yourself the spirit of the tax. Tax generally is supposed to be progressive. It's supposed to focus on for example, bridging the gap within the economy, and all sort of things. Yeah, but particularly the land tax, sales of property. Well, of course, it must be for every sale we must be able to pay taxes. But the question is more because when the prices for properties like land go high, then where does that leave the poor or the urban poor, for example?
Okay. All right, now just look at some of these items as proposed. You do have motor spirit, gasoline, 1,550 shillings per litre is the proposed 100 shillings increment. You do have gas oil, automotive, light amber for high-speed engine, 1,230 shillings per litre is the proposed new tax. For kerosene, 500 Ugandan shillings per litre will be the increment on it. And of course, from the ministry's side of defense, is that the reason as to why they're putting that 500 shillings increment is because kerosene has been used to, sort of duplicate the other fuels on the market. Land in cities and municipalities, 5% withholding tax on gains and from the sale of land in cities and municipalities, sale of rental property and sale of shares of a private company. Cement adhesive, grout, white cement or lime, 500 shillings per 50 kilograms. Then you do have mineral water, bottled water. You do have other water purposely for drinking, 10% or 75 shillings per litre, whichever is higher. Then you also do have opaque beer, 12% or 150 shillings per litre, and that is whichever is higher. Any other alcoholic beverage locally produced is also going to be affected with a 12% or 150 shillings per litre increment in tax. Then you do have powder for reconstitution into beer, 2,500 shillings per kilogram, and so the breweries are definitely worried about the future business in Uganda. You do have also spirits of alcoholic strength by volume of 80% or more made from locally produced raw materials, 60% and 5,000 shillings or 5,000 shillings per litre, whichever again will be higher. And also spirits of alcoholic strength of volumes of 80% and more made from imported raw materials is also going to have 100% or 5,000 shillings per litre, whichever is higher. And so those are going to be the ones that are affected. But at the end of the day, Council, you did make mention of the real estate sector that is quite developing. It's still new, a developing sector for us here in Uganda, and people have been trying to get into the sector. But now with these proposed amendments, you do have people being challenged to, one, stay in the sector, and then those that were looking to come to Uganda and were thinking of it as a very conducive environment for real estate development are going to be challenged with these new taxes. Isn't so?
The Ugandan economy is still nascent in a way in regards to the asset classes through which someone can keep money, can keep value. And real estate is key because a market lacks the depth, the market does not properly understand some of the other instruments, some of the other asset classes, the equity market, bonds. So a lot of people, especially the informal, the unsophisticated class of the workers keep money in real estate. And then you also have investment. These are investment groups, investment clubs. A lot of their retirement money is kept in real estate. So this has been a driver for the real estate sector. A lot of the increments in the prices of land in Kampala has been driven by some of those factors. Now, when you have this tax that comes after, because the intention of the government, I presume, is to tax any property that is not used as a primary home, and that is what the bill says. The sale of any real estate that is not used as a principal primary residence of the taxpayer will be taxed by this tax. So my quarrel with this is that if I say, if I inherit land from my father, if I have to sell that land, the transmission of the asset from my father, from a deceased person's estate, is not taxed. That transmission from the trustee to the beneficiary is not taxed. But if I have to sell off this asset now, then it will be taxed. One of the cardinal principles of taxation is that income tax taxes business, it taxes trading. So when you have a tax that is taxing a transmission or a change from one asset class to another, then I have a problem with that. Because tax is initially supposed to be taxing a trading activity. There are aspects of an activity that give it away as a trading activity. If I am not trading, then I shouldn't be taxed. So my problem is that this tax overreaches. It goes beyond that principle. It seeks to tax someone who is merely keeping money, retirement money, for example, in form of a real estate asset. It seeks to tax. If, say, I have to sell my home in Komamboga and I'm using the proceeds to buy a home in, say, Chira, then those proceeds, the government will take a portion of that, and then the remaining is what I'll use to buy my next home. That's overreaching to me. I don't think it's a good tax in that sense.
Okay. Remaining within the framework of principle, what would be the ideal way for the government to still get the tax?
The ideal way, let the government tax traders, and it's already taxing traders. The law as it stands now is broad, and there are enough enforcement measures to have real estate traders pay tax. I think it's laziness on the part of URA, and maybe Parliament is not preparing enough resources for the enforcement of collecting this tax. But the other issue I wanted to clarify upon is you said that the newspaper reported that it's a withholding tax. It's not a withholding tax. The bill says it's a final tax. And it has nothing to do with any other tax that is already being levied. So that amounts to double taxation. From a real estate trader's perspective, you have income tax. If, say, I'm running a company, the company is already taxed under corporation tax at a rate of 30%. When you bring this new tax, and say every 15th of the following the transfer of a disposal of an asset, you're supposed to account for tax on a disposal of a real estate asset. And yet, at the end of the year, I'm expected to again account for tax on my gross income out of my trading activities. And then you're saying the 5% is a final tax, and it does not come as a tax credit. In the earlier bill that came in 2023, that tax was a withholding tax. Now it is not. So there is no tax credit. You cannot offset it of the final tax, of the final income, of the final liability that is due from you to the government at the end of the year. So my problem again with that is that possibility of a double taxation of real estate. Okay. Yes.
Benard, away from the double taxation that will be pressurizing for the sector, there's also inflation of costs. Because at the end of the day, there's no way Regina is going to suffer that 5%. I'm going to push it down to the person I'm selling to, or the buyer, whatever the case. So there's going to be some serious inflation of about close to 5% on the other hand. And so it begs the question, who is going to be infringed at the end of the day? Because it's definitely not the sector player.
Priscilla, a good public policy is one that listens to the common man. Where we don't have policies that speaks to the interests of the common people, then we then come to understanding that such a policy is actually against the people, or it may sound dictatorial. And so in this case, we are likely to see that the common people resent such taxes because it is not, doesn't speak to what they want to hear. Now, this particular tax, when you look at the land, the 5% increment is definitely a huge burden. The interest of government, when you look at the urban poor, you would want to have many people moving off the urban poor segment into the middle income. And one element of moving from the lower income or the poorest level is that people begins to acquire assets. People begins to get good educations. Now, when you increase prices of land, you're actually keeping them much poorer. Now, we must understand the principles of taxes. He just alluded to it. And it must be progressive. It must be in a way that allows that the poor people pay a fair share. Now, we have people in Kampala or even out of Kampala or even Gulu or Amuro, where I come from, in the urban centers, yeah, they don't have the money. And so when you inflate the prices of land by 5%, of course the seller will say, for me, mine is 5, mine is, for example, if mine is 10 million shillings, and that's the price of my property, the tax is on you. Yeah, so you as a buyer, you have to pay the 10 million that the seller is offering, in addition to tax, and that makes it extremely difficult for the local people to acquire assets. In other words, we are actually exacerbating what we call income disparity. So the poor will continue to remain poor. Of course, those in the upper segment of the economy will not feel it that much, but I can tell you, the local person downtown Kampala will find it very difficult to own property in the municipalities.
Okay. Mark, I do believe you, in one way or another, could be familiar with the real estate bill. It was tabled many years ago, about 14 years ago. It's still on the shelves of the ministry. And in light of these taxes, what are some of the nitty-gritties in that bill that would have been able to protect the sector, first of all?
First of all, I have not addressed myself to that bill, but I have heard about it. And I think I read a story about it in the newspapers that alluded to the fact that they were trying to regulate real estate agents. I think one of the problems we have with, one of the planning problems we have, especially in the urban centers, is that real estate agents and real estate companies are not properly regulated. Yeah. If you had a regulatory environment, a properly regulated real estate sector, then probably you'll not have some of these taxation problems that URA has with collecting tax from real estate dealers. But they are not regulated, so there is no starting point on how to properly tax them. You can only tax them by the only recourse you have is by going after amending the Income Tax Act. And if they were properly regulated, then you would have a way to rein in on the businessmen. From a secondary level, from the line ministry, through the line ministry. Then you start with the line ministry. Then now URA takes over from the line ministry. Just like URA is using data from water, the Ministry of Water and Umeme, the Ministry of Energy, using that data to put together a data set to go after rental income, to lock down on who owns which property, so that they're taxed. So if you had
in other words, we still have a gap in data.
We have it. Yes, we have it.
For even the government to want to tax according to data. So this is tax according to how they see the climate, seemingly booming, but yet not the case.
Yes. So if you had that data to start with, then it would be easier for URA to lock down on who a trader is and who is not a trader. But as it stands now, the law is going after non-traders, and tax should not be taxing non-trading activities. Okay. If I'm not earning income in the sense of trading, then I shouldn't be taxed. That's one of the principles of taxation. Okay. Yes.
Benard, this leaves this sector at a quagmire place, because every year Every financial year, there's a new tax introduced. Yeah. You do have property tax, transfer tax, rental income tax, the capital gains tax, stamp duty. So it begs the question, the fact that all these are making the sector very unattractive at a point when we should be having as much economic turnaround as possible. And so how do we still encourage people to go into the sector and be a part of it to enhance the socio-economic development of the country?
Priscilla, when you read Stephen Stalin was a Russian president. At that time, he was a brutal Russian president, and he would dress up chicken and then eventually give the chicken grains, and then the chicken forgets that it is actually a fully dressed chicken. And that's the pain with most taxpayers in Uganda. And I think government it is in the interest of government to ensure that many people are encouraged to pay taxes. It is a good thing to pay tax because that is the bedrock of the economy. However, the bottom line is actually comes with government being fully accountable. When you have government that is not accountable, and then that is where the question is. We have cases in this country that, for us taxpayers, we are left to question what is the value for money, what is the value for our taxes. There are cases of corruptions that we've seen comes out after now and then, and that is where the problem is. And if government don't tighten on corruption, I can tell you that Ugandans will always pay taxes with reservations. Okay. So there is need for a stringent approach to handle corruption. Okay. Otherwise, the communities will find it difficult to pay taxes.
All right. This doesn't help that there's also the proposal on your cement, your grout, your lime, that will also face a tax increment in there. And that cost, again, will not be to the manufacturer. That manufacturer is going to push the cost down to the end user. And so that's something, you know, in the loopholes there. But Mark, you did mention something about, you know, these retirement groups, SACCOs, and money that is lying there. I mean, if we're to be realistic, these are opportune places for government to tap into and tax them. However, it won't touch them. Some experts say it's because the rich don't cry, so they will not be milked.
This bill has, I don't entirely want to have to be misunderstood or understood to have an entirely negative attitude towards the bill. The taxation of these areas, real estate, and I've already mentioned, let the taxation, let the tax be restricted to trading activities. When you say, if I sell land that is not my primary home, then I'm subject to tax. For me, it does not do it. Mm-hmm. That land, if I'm not trading, and that land is probably an investment, a retirement investment, and I've already explained this. The informal sector, the people that don't properly understand some of the other instruments, some of the other asset classes, all that money is there, but they're not trading. But this is money that they're keeping for a rainy day. You don't tax that. The bill has other features. The bill has is introducing changes into the Income Tax Act, other changes that I'm rooting for, especially in regards to international taxation. Currently, international companies with commercial interests in Uganda are taxed that don't have subsidiaries, but are trading through branches. Branches say a UK company has like a representative here who contracts on its behalf. So those kinds of commercial interests are being taxed under the withholding tax regime as branches. But the introduction of the permanent establishment principle into our law will ensure that the profits that are earned by those kinds of trading activities are properly taxed, and there is less repatriation of the money being earned in that space. So there is still room to raise the money that the government is after to cover deficits, without going after the ordinary person. Yes.
Okay. So we'll be looking into the details of those opportune rooms that they are later on. But if we were to analyze these very same bills in the current financial, this is where I turn to the researcher. From your analysis so far with the current financial year, and in light of these very same bills right now, how have they capped economic development for us as a country so far?
Well, we see, because if we want to see that there is the extent to which the economic development is happening in the economy, then you look at the taxes. For example, what are the drivers of the economy? Yeah. When you look at the tax bill proposed on fuel, yeah, you realize that Uganda, we import our fuel, and cost of transport is a major driver to economic development. And if the cost of transportation is definitely high, then you can tell that there's likely going to be some element of stagnation within the economy, and that is worrying. And in any case, what is economic development? Economic development, as opposed to economic growth, economic development focuses on the interests of the poor. To what extent are the people being empowered? To what extent are people being empowered and being supported? So the question of economic development in light of increasing taxes, then you challenges that notion that economic development cannot be achieved. You might end up achieving economic growth to the extent that the economy probably will grow, because the resources of the revenue is centered among the hands of the few individuals. But the question to the extent of economic development can be challenged. Like I said earlier, when the poor are not incorporated into the development economy, when the poor cannot have land, when the poor's cost of transport. I come from Amuro district, and when you go to Amuro district, I can tell you that transportation is a big problem. So when a local seller, a local farmer in the village finds it very difficult to pick the small goods that they have to access market, then you're not helping the poor.
Perhaps how the government is helping the poor is milk them and then use those resources to give them the good roads so that you can come to Kampala easier and faster, save time. Then ensure that you have a health center 3, 4, and 5 within your area code, fully equipped with all that is necessary. Perhaps have schools, you have UPE, you have USE, all available for the children to receive affordable education. Perhaps maybe that is how government is looking at catering to the poor.
We can then interest ourselves with the percentage increase in almost all these segments. You can look at health, you can look at education, you can look at roads, infrastructural development. I have not taken particular interest to look at the proposed budget for the next financial year yet, but I can tell you that the UPE primary schools received as little, I think, as 1,000 shillings per term, per child for the support in education. So that is worrying. And like I said earlier, that the question that concerns Ugandans is the extent of accountability. We have a very broad public service where a huge chunk of resources of taxpayers' money goes into, and there is no deliberate value for that resources, and yet we have a huge burden going into public service. And then, so the truth is, whereas it is in good spirit that government raises revenue, and I can agree with government that our tax revenue collection is rather below the standard, which should be increased, let us be cautious that the extent of using that tax revenue to the appropriate investment.
Okay, all right. Still focusing on economic growth, that's what the government is saying that they're pushing for. The other reason as to why we're seeing these increments is because there's been defense through state ministers such as Amos Logolobi, who says that we want to lessen government's reliance on external borrowing funds and things like that, and rely more on what we have internally. But when you still are working within the same tax base, Mark, how viable is that?
Well, if that's what he's saying, if we saw the permanent secretary come out and say, I think that was last year, come out and say they were instituting a moratorium, a freeze on car purchases, and then you saw the debacle that went about with a fleet of Land Cruisers that were parked at Colorado, so almost a few months after that statement. So I think some of our problems are self-inflicted. One official says this, and then the next thing you're seeing a course of action that is completely at odds with what is being said. So I think borrowing, we need to rein in on our borrowing. But at the same time, we are a poor country. There's need to rein in on our spending, and you can tax all you want, but for as long as you don't rein in on spending, there is no end to taxation. You will never fill the gap. You can say we want to stop borrowing, and then yes, then you tax, and then.
But the reason as to why they're taxing us is so that they can spend. So you cannot have taxation. Why are you having taxation if it's not for the purpose of spending? So maybe what you're referring to is minimizing expenditure.
That's exactly what I'm saying.
Okay.
The question is, where are we spending?
Where are we spending?
We need to. We're a poor country. We need to act like one. You can't say we are raising. The
president will disagree. He says we're in middle income status.
Yes, we are, but we're still a poor country. I'm not saying being a middle income country doesn't make us a rich country. We're not. So I think our problem is mainly to do with the spending. We have not cracked that code on how to prioritize. If we do that, then some of these taxes we shouldn't be. Some of this borrowing, rather, we wouldn't be borrowing this much, at least.
Benard, which are those areas you feel that government is spending on, but are not necessarily priority areas? Neither do they feed in directly with the National Development Plan.
The bulk of the public service. A huge percentage of our tax goes into paying salaries. Even when you go to Parliament, even when you go to any institution in this country, you realize that paying salaries or remunerations actually account for more than 35%. So you are then stuck with only dealing with less than 50% on direct investment and less. So government must, that is why I appreciate the merger. The merger comes at timely, because that, in one way or another,
rationalization of the MDS.
The rationalization bill, that in a way will help reduce the cost of human resource vis-a-vis the service. And then we believe that once that is complete, then a huge chunk of government resources will then go to priority investment areas. That will help. But our biggest problem in this country is salaries and wages. It's huge, and I think government should rethink it, not in terms of the amount that individual person get, but in terms of the duplication of the labor or the resources. Okay. I think if that is handled, then probably we will see a huge chunk of our resources being relieved for other priority investment.
All right, Mark, in this perspective, you're looking at the next financial year's budget themed full monetization of Uganda's economy through agriculture, through industrialization, expanding and broadening services, digital transformation, as well as market access. And now with these proposed tax amendments, do they address this theme? And how would they address this theme?
Most of you've just alluded to the digitization of the digitization,
digital transformation.
Digital transformation. Yeah. I think that has been addressed. That will be addressed by. There is an amendment sort of that has been debated, I think, where they are trying to move the National Information Technology Authority back to the Ministry of. I think that's again a policy that is at odds with that budget policy point, because if you're saying you're after further digitalization of the economy, but then you're trying to cancel the entity that has been at the forefront of all this digitization, then for me it doesn't make sense at all. The taxes, these amendments have nothing to do with the digitization of the economy. That will be taken care of by the amendment of the other amendment or introduction of the other laws. Yeah, but the current amendments, I haven't seen anything that points to, addressing that particular policy point. Okay.
All right. So as we wind up on this conversation, we must, look to the brighter side of things. So it begs the question, what harmonious policies in this aspect or otherwise should be considered in ensuring that, of course, these amendments, as if they are agreed upon and passed, actually how can I say it, both favorable to the government as well as to the people that have to pay them? Let me start with you, Benard.
Let's agree. Like I said earlier, a good public policy is one that interests itself with the interests of the common man. There are sentiments that this particular policy has not been adequately consulted. So while I agree that the proceeds from land should be taxed, while I agree that perhaps the sales of properties, sales of properties should be taxed, let's consult the people. The answers are with them. They will cooperate, they will pay the taxes. But if we don't consult with them, then we are trading on a very thin path, and that puts the economy at a whole loggerhead. There's going to be tax evasion, or perhaps even tax avoidance, or whatever. So let's consult the people, let's agree, and then find a way that we can raise revenue to support government responsibility, but also does not over-milk the cow. Yeah.
Okay. All right. So if there's no money in the economy and yet you're trying to squeeze money out of the economy, how do we resolve this particular issue, Mark?
Of course, there's a saying that one of the two of the certainties of life is taxes and death. Yeah. So we can't run out from the question of taxation. For as long as we want a better country, then we have to contend with the fact that we will always have to pay tax. You've seen the infrastructure in Kampala falling apart. Once in a while, I drive on the Nigeria Bulindo Road, and every time I'm on that road, I'm just cursing. I don't know how people who live that side of the city have to contend with that, driving on that road twice every day. So, so taxation is not a problem. The problem for me is failing to properly lock down on who should be paying these taxes, who is making money
And you had earlier mentioned there are other windows of taxation that are present that government should tap into. Could you mention some of those?
I've just mentioned international taxation. These companies that are making a lot of money here through small branches and then repatriating all that money.
Profits,
And one of the provisions in that bill is to have them, to force them, because the government intends to tax them as separate entities from their motherships abroad. So that might force them to incorporate and run separate subsidiaries here, which is good for us. So that's one way. That's one way that, and I applaud the technocrats in the Ministry of Finance and URA for that particular provision. My quarrel with the bill is the intention to go after non-trading activities of people who are keeping retirement assets and the like.
Okay. All right. It's a tough one, but we wait to see how government will handle it. Of course, the committee will be able to do the research that Benard here spoke about. But Benard and Mark, thank you so much for your submissions. At the end of the day, of course, the question still lingers on the rationale behind some of the proposed taxes that seem to have a place of a heavy burden on the low-class Ugandan, more than the class of Ugandans who actually earn this money, as much of it that can be taxed. So, but we wait to see how things will pan out as the next financial year is taking shape in its preparations. Do stay with us, as we do have another conversation coming up, catering to the judiciary and how it is trying as much as possible to have public engagement with their service delivery.